Hello, everyone. This is Vineet Jain, co-chair of New Delhi chapter of FENG, along with my colleague, co-chair Arun. And I have a pleasure introducing before everyone our guest speaker, Mr. K. Vaitheeswaran, Vaithi in short. And this endless list of credentials and accolades what sir has. But in brief, if I may just share with you, first his professional journey. So from an educational perspective, he is a lawyer, he is a company secretary and a cost accountant. He is, a part of this advocacy and consultancy firm, K. Vaitheeswaran and Company, which practices in the areas of all forms of taxation, excise, customs, foreign exchange and remittances related matters, and the list goes on. From his professional journey perspective, he has been part of various chambers of commerce. He's been part of the state government's committees, right? So of course, he has held multiple positions in multiple associations over time. And from his personal journey perspective, I see himself as an avid blogger. I see himself, putting music for social cause. He is into humor writing. He is past president of Rotary Club of the state here in India. And besides that, not to mention about various books he has authored. Some of them are really best-selling ones, and he has just published a new book called Taxation of Digital Economy. And so please do look him up, try to read the book. I'm sure you would find it pretty encouraging one. He has kindly agreed to enlighten us on a pertinent topic, budget 2023 and the GST, from an India and the Indian laws perspective. So, that's it from my side. I'm really pleased individually to know him and to be having him today. And, over to Arun in case he has anything to add I might have missed.
It would be a privilege for all of us to have him with us today. And I thank Sir specifically for accepting it at a very short notice. There's a busy schedule. I'm so happy to have him here. And there's nothing more to say. He's always has a wit that goes with the wisdom of his knowledge. So it's a pleasure to always listen to him about the law. Though the law is a dry subject, he makes it so interesting for us to keep us engrossed. A fantastic. Thank you, sir. Over to you, please.
Thank you, and thank you, Mr. Jain and Arun. Good evening to all, and good morning to good afternoon, depending on where you are from. And nice of you to join today. And let me share some of my thoughts on India's budget as well as the GST story, which is a very significant story in terms of business reform and tax reform is what I would call it. So without much ado, I'll go straight to my presentation. So some numbers are very interesting. India's first budget was in 1947 after the independence, and it was for about a 7.5 months period. And the budget estimate for total revenues was about 171 crores. And the fiscal deficit at that time was estimated about 24 crores. Most of the numbers are in crores, and I'm sure if need be, we can look at a data conversion later. Why I wanted to put on that particular data point is that from 1947, we have moved up to 2023. And today, India's total receipts, other than borrowings for 23-24, is 45 lakhs crores. So we have moved from 171 crores to about 45 lakh crores. Our revised estimate of fiscal deficit is about 6.4% of GDP. And the deficit is estimated for the next year to be 5.9%. and it would be below 4.5% by 2025-26. And the market borrowing for 23-24 would be about 11.8 lakh crores from rated securities, and balance would come from small savings and other sources. So these are just some numbers to set the budget going. But I would like to talk a little about India's story. All of us have been talking about this here and abroad. Fifth largest economy. What does it mean? It's not a small achievement to have happened over a period of time. About 8-9 years ago, it was about ninth largest economy, and we have moved up to fifth largest economy. And it is coupled with the fact that India is the fifth largest foreign exchange reserves in the world. And one would always wonder as to what's the external debt scenario. And as far as India's external debt is concerned, as a percentage of GDP, it's about 17.6%. And comparing some countries, you would find that it's quite a very modest and comfortable number. And there was a survey done by US CFOs where they have identified India as the second most top destination for investment. And currently, you find that consumer spending is back to pre-COVID levels. All of us saw, the world saw the impact of COVID and the onslaught of COVID and how businesses died and so many things changed completely, drastically. The way of doing business itself changed. But it's nice to know that spending is back to pre-COVID levels and unemployment trends are lowering. Today's hotel occupancy in India is at its peak, and you have a service export that is growing. Goods export currently is not growing because of the fact the world is going through a different kind of a problem. In Europe, you have an energy crisis, you have the war and its fallout, and therefore there is significant inflation, significant cost impact, and therefore discretionary spending is down. And discretionary spending, if it is down, you always have its impact on garment exports and other certain type of goods export. I came across this interesting statistic that the credit card upgrade and downgrade ratio is 5:1, which means the limits keep enhancing because of the fact that the person is making the payments promptly, and there is no downgrading of the limits because the payment is again made well and the cards are all well honored. The bank impaired loans are down, industrial loan growth has increased, and bank margins have increased. Of course, this may not be the best day to talk about banks, but then we're talking about the India story, and therefore these are data points which we do talk about. Credit to and by NBFCs have increased. India is the fastest growing nation as per IMF. Now, this is all, most of us are aware of it or have come across it, but these are something which is interesting, which is very peculiar to India, which you would learn, you would read. These data come from what is called as economic survey. So if you look at it, about 11.7 crore household toilets under what is called as Swachh Bharat Mission. India is a huge country, humongous size. You cannot think of a particular way of describing the size of this country. And with that kind of a population, with that kind of a rural and semi-urban and semi-rural and village and far-off flung districts, one of the key things which was identified was in terms of policy was in terms of toilets, in terms of LPG connections, in terms of vaccinations, in terms of ensuring that the economy becomes formal by people coming to the bank account system, banking system. Today, the digital world is probably led by India in terms of payments. The payment processing in terms of digital payments is very, very high. Those of you who are abroad, you will be surprised that if you walk into any part of India and you just want to pick up a small fruit from a roadside vendor, you'll be able to make a digital payment. So there's the cash may not be the only one that is needed. There are enough ways of settling payments. So that's some kind of development that has happened across the country. Insurance cover is significant in terms of 44.6 crore persons. And of course, you have significant amount of direct benefits wherever it is possible. It goes to the account rather than through intermediaries. One significant facet of this budget is the capital outlay. See, I would probably say that India is replicating the China story in terms of infrastructure. All of us are aware of the China story in terms of how much focus was there on infra, how much focus was there on roads, even at the point of time when there was no business, people just, the money was just spent in terms of infrastructure, and it had its own dividends, it had its own growth, and we had certain specific cities in China which really grew. So we are probably taking a leaf out of the book. And if you look at the last few budgets, you find that there is a significant outlay in terms of capex and specifically in terms of infrastructure. So we are talking about 10 lakh crore, which would be nearly 3.3% of GDP. That will be about 3 times outlay from what it was in 2019. and again a significant amount towards the railways. And this again is much more than what it was in 2013-14, about 9 times. And today, airports are just mushrooming everywhere, if one have to use that terminology. Every city seems to be connected. There are regional airports where you can directly connect, and of course you'll have a layover and then move on to the next flight. But still, the fact that you're able to reach out to far and flung places by air is a clear wonder in terms of making transport easy for passengers, for business, for trade, for industry, for goods. Everything has changed. So more and more airports, heliports, water aerodromes are all planned in this budget. Apart from that, there is enough and more on specific segments which are relevant to India in terms of agriculture, in terms of India is #1 in terms of population. All of us have read in history books, India used to be #2 in population, but we are now become #1 in population. While one would really understand that that would create tremendous pressure on the service delivery systems and the infrastructure and things like that, the average age is 28. Now, the average age 28 really talks about wonders and talks about the scope and potential for India's quality in terms of their ability to provide services across the world. So a lot of activities are identified in terms of these things, and some of them have find place in the budget. Some of them have got specific focus in the budget. Some of them have got schemes which are allocated for that. So all these are all seen as part and parcel of India's budget program. Now, the numbers are really growing. So if you look at corporate tax, we have the budget estimate was about 7,20,000 crores, and they had to revise the budget estimate because the revenue is so good and is now at 8,35,000 crores. And the next year's estimate is about 9,22,000 crores. So you just talk about corporate tax, and the tax on income is what you call as the individual tax or the personal tax, and that's also growing. And of course, we have the customs and other taxes, which I'll talk about a bit later. So there are the next part of my discussion today would be on some facets of the budget in terms of tax proposals, and then I'll go on to the GST aspect of the budget. So typically, diamonds, like there are people who swear by diamonds, and there are people who not like synthetic diamonds. And now technology has created a solution whereby you can create in the lab diamonds which are like natural diamonds. So you can replicate nature's process over coal. And that is what is called as natural diamonds. And therefore, the raw materials are required for that. And that is reduced to zero to ensure that manufacturing in India takes place. Some of the duties are all slightly increased here and there, but all within the limits in the WTO. So you have certain items which climb up in terms of duty. And similarly, there are items in terms of exemptions which are pruned, etc. This is a plan. So basically, you have a number of exemptions in custom duties. So a plan is laid out saying that some of them will remain till next year, some of them will go after 2 years, some of them will go after 3 years. So some kind of business continuity is well established by being aware of all these changes. Now, coming to personal taxation, the Income Tax Act is by itself quite a complex tax code, and over a period of time, it has grown in terms of changes. Like in any other country, US tax is also quite complex. I think by nature, direct tax is complex because the lawmaker struggles to create a particular provision, which is not identified for a loophole by any of the professionals or consultants or the assessees. And therefore, it is very well, it has to be a complex draft. They need to imagine what all could go wrong or what all could go right and write the law accordingly. So world over tax laws are quite complex. I'm sure as CFOs, all of you would agree that the laws are never simple. And so Income Tax Act has got its own set of baggage and series of amendments. So you have a lot of these deductions. I invest in something, I get a deduction. I do some planning, I get some deduction. I put some money in some instruments, I get some deduction. So there are a lot of bundles and bundles of deductions. So it's quite a complex computation process. So now what they're looking at is, why not give something which is simple? So you take a flat scheme. So personal tax, so you pay a particular rate of tax, dehorse all the deductions, you forego all your claims of deductions, etc. But if you want to remain in the old scheme, that option is also available. So this is probably a testing ground to see how many people are shifting to a system which is giving you a flat rate of tax, a flat rate of exemption without much of deductions, vis-a-vis a higher rate of tax married with a lot of deductions, etc., whereby the effective rate could be the same. So it is something which is testing around in terms of old scheme versus new scheme as far as personal tax is concerned. MSME is a particular terminology where we deal with what you called as micro enterprises, medium enterprises, small enterprises, etc. So the typical most of these MSMEs across the world struggle with what we call as cash flows. So cash flows are a challenge because they have their waiting period from the buyer. The buyer has to release the payments, and therefore there is a lot of working capital pressures and cash flow struggles for MSME. So even though that tax may not be the best tool for it, the tax is being used as a tool here, whereby now there is a provision which says that if you're dealing with an MSME, if you're buying MSME, especially a micro enterprise or a small enterprise, please ensure that you make the payment within the time prescribed. By the way, for people who may not be in the know, to protect the small enterprises and micro enterprises, there is a specific legislation which mandates that the money is due to them must be paid within 45 days from the date of invoice. So if you don't pay that within the time frame, then the expenditure under the Income Tax Act would be disallowed. So this is some kind of a tactic to ensure that the cash flows and improve the MSMEs and the working capital improves so that they remain healthy, because they were all hit massively by the COVID impact. We're all aware of capital gains. There's across the world, there's capital gains where you have a capital asset and then you transfer the capital asset. Take a typical case of a house or a building, and therefore when you sell that building, you have capital gains. So typically, most of the laws always provide for an investment route whereby you sell a property, you have gains, you buy another property, you get some exemptions. So now they want to cap the limit whereby the investment that you make in terms of gains from capital gains deduction should not exceed 10 crores. So if you make gains significantly more than 10 crores, then you pay tax. But within 10 crores, you still have the window of putting that money in some investment and ensuring that the tax is reduced or mitigated.
Yeah.
This is one provision which is specific to Indian tax laws, where it talks about a scenario where you have a transaction where there is a consideration between the parties for the transfer of shares, but the consideration that is structured or the deal that is struck between the parties is less than the market value. So if it is less than the market value, then there is a provision which says that the difference constitutes your income. And this particular provision was not earlier applicable to premium received from non-residents. And now this amendment has come from 1/4/2024 to make it applicable to non-residents. And therefore, this is likely to impact startups and companies where valuation is perceived based on future market potential. This is again a tax deduction linked with insurance. There was a particular instrument where you could get an effective return of about 6.7 to 6.8% tax-free. So compared to a normal fixed deposit where you may even earn 6%, but it will be taxed at about 30%. So your effective rate was only about 4.8 or less than that. So this was a good tax instrument. It's not a zero tax instrument, and that is getting curbed in the sense that from 1/4/23, if you make this investment, it will not enjoy any kind of tax benefit. You'll have to pay the tax. So basically what's being done is they're looking at various provisions which were acting as windows for some kind of tax shelter. And I wouldn't call it evasion. They're all legitimate tax planning provisions which exist in the statute. So some kind of combing is done through the legislation, and wherever possible in terms of revenue, they look at whether this will of course affect only HNIs. This will not affect the common public. So basically HNIs who were taking advantage of this provision, and they said, why not? You earn, you pay. So that kind of concept is crept into this. Online gaming is now the focus for tax, because they've realized that gaming is a huge business, and online gaming is really humongous in terms of its volume, in terms of its transaction. And therefore, and a lot of these activities happen without, it's very difficult to track some of these transactions. Therefore, there is a TDS tool that is introduced to capture this transaction. And there is also a tax in terms of whatever winnings that you make, you have to pay the income tax on that at the rate of 30%. So that, to my I would say that summarizes some of the key budget proposals. I have not spent my presentation or have not involved in very highly technical amendments, which may or may not be relevant to the global audience as such. And therefore, I chose things which are common across the world. And now I'll talk about something which is a very, very interesting tax change that happened in 2017. It is a massive, massive tax reform. And it is also a business reform because it changed the way things operated as far as business is concerned. So to set the tone, before GST, that is before July 2017, what was the scenario? Number of players in the market, different structures. You had corporates, you had partnership firms, you had sole proprietary concerns, you had LLPs, you had different structures. There were different taxes, whereby if somebody manufactures something, there was a tax. Then there was a concept of exemptions. There was a concept of no tax in terms of nil rate. Then there were wholesalers, there were dealers, there were retailers. Then there were service providers. You had software developers, you had software service providers, you have AMC contractors, you have construction service business, you had caterers, you had insurance service providers, you had consultants, you had chartered accountants, you had many kinds of service providers. Some of them were taxable, some of them were non-taxable. And then you had people who are called the job workers who only do work on the material belonging to others. So all these were given differential tax treatments and differential systems. And this gives you a perspective. From a central government perspective, these were the indirect taxes that existed before GST. Different names, different events, taxable events. You had excise duty, CVD, customs duty, and then there was different kinds of cess. There were product-specific cess, there was R&D cess, there was calamity duty, clean energy cess, Swachh Bharat cess, you name it, it was there. So all this was extremely complicated from industry perspective, business perspective, because you deal with multifarious laws, you deal with different tax statutes, you deal with different computation mechanisms, you deal with different valuation mechanisms, you deal with the rate changes that happen, and then there is a huge cascade with one stepping over the other. And since India is, if you look at the US, you have the federal income tax, and states also have a state income tax. In US, there is no federal sales tax, but there is a state use tax or a state sales tax. If you take Europe, there is, if you take UK, there is a UK VAT, which is on goods and services. If you take Europe, there is a EU philosophy, EU overall umbrella, which talks about VAT, which is on goods and services. But in India, because of the fact that we are a federal structure, where you have the center, which is the federal, as well as the states, and all of them having their respective arenas of operation through the constitution, the states also had power to levy taxes and on the same transaction or a different transaction in different ways. And therefore they had VAT, they had purchase tax, they had CST tax, they had entry tax. Entry tax is a very interesting thing. For example, if you're in Boston, you'll probably go to the next state, which is New Hampshire, and buy something and come back into Boston because the rate of tax is quite cheap in the other state. Well, if you do that in India from one state to another, there used to be something called as an entry tax. You can't take a tax arbitrage by traveling to another state and buy something and come. And therefore, when you entered the borders, you had an entry tax. These were all in existence in the pre-GST regime. So you have something called as octroi by the municipality. Then you have entertainment tax, which is on films and other for bowling and all other entertainment. Then you had luxury tax. Then you had stamp duty and registration fee. So the effect of that is that multiple rates in different states, multiple definitions, and huge cascading effect, which was inevitable if you have different kinds of taxes. So what can you say that India was a free market before GST? Because India's GST slogan is one nation, one tax. So was it not one nation, one tax before? The answer is no, it was not a free market, for the simple reason that VAT credit made you buy locally. And complex state laws and ever-changing tax landscape were serious issues which people dealt with. So what really happened was 13 indirect taxes existed. Tax on tax existed. Central taxes could never be set off against state taxes. State taxes could never be set off against central taxes. And then we had what is called as the aspect theory. For example, if I take this mobile phone, the manufacturing aspect can attract a tax. The selling aspect can attract a tax. The service aspect can attract a tax. The entry aspect can attract a tax. And then the profit, if I make in this transaction, can attract a tax. That's what it's called as an aspect theory. It was borrowed from Australian theory. So that by itself allowed every state to levy a particular kind of tax, and there was overlapping in terms of central and state tax. So I would, from most analysis indicate that the effective rate was nearly 36%, but only VAT was seen on the product. So people never thought that they were paying so much of hidden taxes on a product. So once you have this chaos, so typically, you have chaos to get clarity. So when you have an indirect tax chaos in terms of multiple taxes, etc., the concept of GST became relevant, and the center was interested in levying GST. The state was the industry was keen to bring in GST, and governments were looking at having some kind of a simplified law, but a larger tax base. The state always looks at revenues. They wanted to increase the revenues, and state was looking at opportunities for taxing services. So everybody was gung-ho about GST, except that some of the manufacturing states said that in case GST comes and we would lose our revenue, what is the solution. And therefore, India decided to go into GST in a very big way as a tax reform. Primary purpose has been to eliminate the cascading effect of tax, bring in an equitable system of taxation, bring in a simpler system of taxation, and bring in one market. So if I have to put some kind of a question answer in terms of whether we achieved some of them in the last 6 years, 2023, in July will be the 6th year of GST. As a tax reform, yes, the answer is 100% yes. Industry, government, consumers have all gained in the process. Elimination of cascading effect, yes. Recent changes, of course, indicate that cascading effect could be showing its head again, once again, but this is more in terms of compliance. Today, if you're a big buyer or a big receiver of commodities or services, then you need to be careful about your vendors to ensure that your vendor pays the tax promptly. So if your vendor is good, your vendor is paying his taxes promptly, if your vendor is filing his returns promptly, then you have no issues. Equitable taxation, yes, entire supply chain is taxed. Simpler system, I would say no. It was intended to be a simple one, but given the ramifications, it has become quite complicated. But it again depends upon who you are. If you're a very big manufacturer, you would say GST is very simple because you'll have an army of accountants and professionals to handle it. If you're a very big service provider, again, you'll have a team, in-house team to handle it. But if you're a small service provider, you will always say that it's quite costly because it's difficult to implement. One market, yes, GST rates are the same across the country. Today, any product anywhere in the country will have the same GST rate, which is by itself a classic feature for one market. So let's look at what industry gained. Harmonization of taxes is something phenomenal for the industry. From 13 rates of tax to one rate is no joke. And that eliminated the cascading effect. Tax on tax was completely eliminated. And then the basket of input tax credit has really grown. Today, I can take input tax credit on everything, my furniture, whatever I incur for my business, I'll be able to take credit. And the biggest advantage for a business entity today is that the rate is the same across the country. So I can pitch for a West Bengal market, I can pitch for a Gujarat market. I don't have to worry about tax arbitrage or a different rate of tax. And therefore, the borders have simply opened up. And all unwarranted business structures that were created in the pre-GST laws have all been eliminated. And today we have a very lean and efficient supply chain management. Goods can go from anywhere to anywhere. And there is a lot of vendor verification by the buyers. And therefore, what has happened is you have a transparent regime that has come in, which is what the industry always wants. Industry wants clarity, industry wants simplicity, industry wants uniformity, industry wants a system which does not increase its cost because of tax. And once your cascade is eliminated and your tax on tax is eliminated, your efficient tax system automatically comes into play. Now, consumer, we always look at industry. Okay, industry is very happy, the big guys are happy. Are the consumers happy? Obviously, yes, because if you're talking about a 36% effective rate, that has come down to nearly 18% to 12% on average. That's a massive reduction in terms of tax on goods. And the awareness is huge. Today, every person in any part of the country knows what GST is. And it is not easy for somebody to pass on something which is not really a tax that can be passed on. And product pricing, service pricing have all become transparent. People are aware as to what you're charging, what you should not charge. And customer-oriented services are at a lower rate. So this is typical, a kind of an approach of socialistic principles to apply, so to say, that you look at certain industries where it hits the common man a big time. For example, take restaurants, take hotels and restaurants. India's GST rate for hotels and restaurants is 5%. So the B2C, business to consumer transaction in terms of food and food deliverables, etc., are at 5%. So there are items like that which are identified and kept at a very, very low rate. And in case somebody wants to do a lot of profiting in terms of tax, there is a mechanism which in place. The biggest selling point, I would say, for GST, and I would say as a success story for India's GST, is that India did not see inflation because of GST. Most countries which implemented any kind of an indirect tax reform would always see inflation. But India did not see inflation, probably because of good planning in terms of what should go up, what should not go up in terms of structuring of rates of tax. And one indirect tax levy is again a big benefit for the consumer. So we have seen that the industry has gained, we have seen that the consumer has gained. Now is the government. Has the government gained in the process? The whole philosophy of GST was also to help the government. And the biggest advantage for government is that the assessees have increased. Number of assessees have come up into the system. Widening of tax base. So people who were in the unorganized sector, who were in the untaxed sector, even though they had revenues which had to be brought into tax, are coming into the system. There is phenomenal data mining that is giving results to the government. So today, the data that is pouring into from different forms can enable a government or a government official to clearly identify whether there is innovation taking place somewhere and typically track it. So that kind of live data really helps, and revenue comes from multiple assessees, which is an effective system of taxation. And there are enough trails which are available to ensure that there is no leakage of revenue, and consumer awareness always helps the government, and that typically has shown increase in revenue across all state and center. I'll skip that for the moment. So let me look at the numbers to show where we are in terms of collections. So the economic survey talks about a rising average monthly GST collection. It also talks about year-on-year growth in cumulative gross GST collection. And one more significant data point is that when the GST was started in 2017, there were 70 lakhs registered GST taxpayers. And in 2022, it has doubled to 1.4 crores, which only shows that the economy is getting formalized. So people who are not in the formal economy, people who are dealing with cash, people who are not in the system, are walking into the system and becoming part of the system. So once you have that, then growth happens. They get access to market funds, they get access to institutional funding, they grow and they contribute to the nation's growth, they contribute to the exchequer, they create employment, and they, because of the fact that they're able to pay significant salaries to the employees benefit grows, the employees per capita grows, and because of that, the consumption grows. If consumption grows, again, the benefit goes back to the business, and then again, it's a cycle which completely benefits all. So a formalization of economy is very, very critical, and that GST has played a very, very big role. So these are some numbers to show where GST collections have really moved. We started in July 17, which is about 7,19,000 crores. And from there, in 22-23, we are about 12,82,407 crores. A huge, huge increase that has happened, and the story has just begun. So this is only the tip of the iceberg, the potential of growth, because the formalization of the economy keeps on increasing. You have new and new businesses that keeps coming, and therefore, as the GDP of the country grows, you also have the tax collection that grows, which again goes back. So going forward, it's a success story, and there is more to come. But there are challenges in terms of trust deficit. Biggest criticism for India's tax laws is that there is a very trigger-happy environment in terms of interpretation of what is taxable and what is not taxable. Maybe the trust deficit has to be bridged. Complexities will definitely have to be reduced. And with increase in tax collections, obviously rates will slowly come down. And we need to ensure that the assessments have to be simpler and plainer. And one should only look at serious evasion and rather allow the business to grow on. There are technical challenges which are still being faced, but data mining is very, very powerful, and you should be more focused. And so being general, because if you're focused, you can easily target what is required to be done. Sectoral analysis should also be carried out to improve the law so that you can identify what are the issues for a particular sector. And once you have seen the success story for GST, you can probably look at India would probably look at similar reforms in direct taxes and look at some kind of massive change that can happen. And I would believe that technology is a huge game changer, and that is evident today in India. Today you have virtual assessments, virtual appeals. COVID taught us many lessons, and one of the lessons was how you can do business without being physically present, how you can conduct. In fact, during COVID times, most of the courts were virtual. So I had the wonderful advantage of sitting in my office here and being in the Madras High Court and then finishing the matter and going to the next cabin and being in the Calcutta High Court or going to the Delhi High Court. It was all wonderful. And probably, I don't think it will completely disappear. The option of virtual and physical is now going on together. But in future, I'm sure that some of the matters will come back to virtual courts in a very, very big way. So virtual hearing in judiciary has completely revolutionized things. Similarly, in assessments, it's all video conferencing. All appeals are all getting through video conferencing. So we're moving towards a paperless litigation. So who knows, probably lengthy courtroom arguments may also not be there. You could probably have summary suspensions, etc. So summary submissions, which with the detailed analysis submissions. And you have obviously new tools for research that is coming on. ChatGPT came in and completely changed the whole world, and we soon have many more products which are following. So as professionals, always interesting as to what is the role of all these things, whether they are going to be enablers or disruptors, time only would tell. But there is always a disruption and enabling element in a disruption, and one should be wise enough to pick the best of the world that are changing. But I'm sure that technology would identify issues and even change the way legal work happens or courtroom happens. And to last but few slides, I would probably see in the future, you would have robotic juniors. The law firms would stop hiring people. You would have humanoids or robotic juniors who would be leased out or bought. Paralegals would become completely irrelevant over a period of time, and basic and planned research would be completely automated. And most of the questions would be handled by chatbots. Already you're aware that the Turing test is becoming totally redundant. But still, what would remain, I always have this debate with some of the professionals who say that AI would rule the world and AI changes everything, and so that the human mind is free and can think. So the question is, what are you going to do about it? So you're so free, what are you going to do? Do you have a job to even have the luxury of thinking about what you're going to do if AI completely replaces you? So then people say you can be creative, but then AI is equally creative. Today there are developments that are happening in this world in much rapid space that even the creative world would be full of tools which develop here. So then what would you do? Would you end up watching reels all through, or you look at something creative? So somewhere laws would change in terms of getting a balance, and wherever there is skill sets required, that humans would still play a role. Interpretation at least would still be within the scope of human beings. Of course, technology would be a tool, and existing litigation landscape in India and new businesses would continue to provide opportunities for professionals, because business keeps changing. Even though the basic model of business remains the same, that you carry on your business for profit and you have a transaction to ensure that something reaches to somebody, the whatever format. See, what was a book is now a download. So what was a film is now a stream. So things have changed in terms of the format, but the entertainment aspect still remains. Whether it's Netflix or whether it is Prime, you still watch the film that is streamed. So the format has changed, the deliverables have changed, the mode of delivery has changed, but the transaction is fundamentally remaining the same. Therefore, experience counts. So if you're able to bring in experience based on your past domain knowledge, you would definitely be able to play a role in the new world where technologies will completely change things. So my last slides, where would taxes be in 2030, at least for India is concerned? Petroleum products are still not in GST. I expect them to happen even earlier. And you will find taxes also by the municipalities, which will increase. And then taxes on gambling and betting would have become completely legal. And you will have massive reform in the property-related tax laws. Property-related tax laws would completely change. And just like the US, you would have the inheritance tax. You will probably have climate change-driven taxes. You would have environment-driven taxes, because tax is a tool. So either as you pay, you pollute, you pay kind of concept. So you will have paper use tax, you'll have probably a food waste tax, and marriage expenditure. You have seen the big fat wedding. So if a lot of money is getting wasted on a marriage, then why not a marriage expenditure tax? Social responsibility tax, corporate social responsibility tax, then climate control taxes. And the last one is just a humorous thing to stop WhatsApp messages across the world, where people just wake up in the morning and wake up the whole social WhatsApp groups with a good morning message. So probably a tax on that to reduce the amount of data. So who knows, probably the data could become so powerful and voluminous that the voluminous nature of the data would ensure that some kind of control comes in terms of how you use the data. So taxes is just a world that is growing, because if you go back in history, there were at one point of there were taxes on windows. So if you go to Europe and some of these see the old buildings, heritage buildings, you'll find there are massive windows which are boarded. Because at one point of time, if you had windows, you paid more tax. So people started, barricading their windows to prevent the tax. There was a tax on hats. There was a tax on bricks. There was a tax on urine. You had ultimately different kinds of taxes if you go back in history. So like how taxes have evolved over a period of time and come to the stage of goods and services and income, I'm sure going forward, we'll have new ideas like the virtual digital, the VDAs or the virtual digital assets or the cryptocurrencies are also getting into the tax regime. So one by one, as and when new things develop, you'll find new taxes, and taxes remain a very interesting spectrum in terms of business as well as the lawmakers. And with that, I would conclude my session, and thank you to the organizers for calling me and asking me to share some of my thoughts on India's budget as well as India's GST tax reform. Thank you for this wonderful opportunity. I'll be glad to take up questions if any.
Yes, sir. Thank you for an excellent presentation on the past, present, as well as the future of taxation. I would like to bring to your attention that there are two questions in the chat box. The first question is from Mr. Jatin Luthra. I'll just read out what he has posted here. While the benefits of GST cannot be disputed, the one nation, one tax is still to be achieved. Businesses still need state-level registrations, and the concept of interbranch provision of service is bizarre. Do you see the law progressing to it being one registration for one entity?
It would be difficult for me to say that we would come to that stage where there'll be only one registration and one compliance, given the fact that we have about 30 states and the central government, and each of them have their own source of revenue and their own demands in terms of expenditure and budgeting and policies and their own commitments to the quality of the state. And therefore, the own revenue is so important that it will not so easily go away. But I'm sure the reforms will continue to happen, that there's no end to the kind of reforms, and I see it happening every year. So maybe some kind of ease of collections, ease of payment could also happen in that process.
So the next question is from Suresh Anandam from Canada. His question, first question is GST tax returns, whether a company has to file a single tax return or needs to file multiple tax returns where they have operations.
If you are a manufacturer and let us say you are located in 6 states in India, you have 6 factories or you established businesses in 6 states in India, then obviously you need registration in all those states. Even though the rate remains the same, the law remains the same, you need registration in each of those states, and you will have to file returns from each of the states. But everything is online. There's no physical filing anywhere. So you can sit in your corporate headquarters and file all the 6 returns if you're a CFO in one location.
Second question from him is, how is the GST remittances adjusted in the tax return? Obviously, being from a different geography, I think he just wants to.
No, Canada's GST model is the same. As far as India is concerned, India's GST is identical to Australian GST and EU VAT and Canada GST. So the same concept whereby the supply is subject to GST. So if I make if let us say a manufacturer of electronic components makes a supply, and on that supply he's liable to pay GST at whatever rate prescribed, and whatever went into that product in terms of his business cost, in terms of expenditure, in terms of materials, in terms of services, in terms of all these procurements, all these would have come with a GST. So he would be able to get a credit of that, and that ITC, as we call it, input tax credit, he can set it off when he pays the GST on his output. So the typical VAT model prevails in India too.
And that's all listed in the chat box. I would like to know if anybody else has a question, they can post it. Else, we can move ahead with the next part of the event. I request Charlotte to post the poll questions so that the participants can address and respond to it immediately. Friends have posted, you would see a screen before you. You can answer the screen.
Thank you, Mr. Shivraj. Thank you, Mr. Suresh.
Are you able to see this? I have not got a single response.
Thank you, Mr. Vani. Anand Subramaniam has posted a question where he talks about a recent court judgment which has allowed states freedom to tax under the Constitution. No, it is not as if the court gave something which was not there. The way GST is levied is that the center, which is the federal government, and the state both tax the same transaction. So if there is a supply, which is a transaction, and the GST rate is 18%, the center levies, the federal levies 9% and the state levies 9%. So it is as as simple as that, where both of them have the power to levy, both of them collect the tax.
Well, fantastic session, sir. And especially, it's eye-opener, the robotics part of it. I hope for expanding the tax base. I think you have given some to the finance ministry, especially the good morning tax and whatnot. I hope nobody is participating from the ministry and the organization. I know.
No, it's as simple as Arun, it's as simple as that. So long as WhatsApp remains free, the messages keep flowing. The day you have a tariff for messages that you post, then the discipline will follow.
I understand. So the response from the participants is excellent presentation.
Thank you, man.
Is the general response. They are so happy with your presentation, sir, for the knowledge sharing. Though I had asked them to do the poll answer to the poll questions, I'm not finding a single answer. I don't know what is the problem. Charlotte, can you help with this? Is it visible or not visible to others? Can somebody respond? Not a single person has answered.
So Arun, I see reply.
You got a reply? Very good. Okay.
So 10 out of the 16 people have replied.
Oh, okay.
Right.
So I'm only a participant. Okay. Charlotte is the host. Okay. Okay. I get it.
Right. No, but you are also the co-host, I guess, Arun. If you have the poll tab,
Oh, no.
When you click, what do you see there?
No, I'm not a co-host. I'm not designated.
No, Arun is not a co-host, so I'm going to close the poll out and show the results.
Thank you, everyone. Forward to all your participation in the next on I think 8th of April. Charlotte, is it the 8th of April next session?
It is April 10th.
Or 10th of April.
10th April.
Yeah, Charlotte will be mailing that separately. Kindly register and participate. And thanks to you again for taking time to share on such a complex topic in a concise way. We are able to understand the growth story of India through the eyes of taxation. And in the current scenario of SPB and credit Swiss or debit Swiss, it's heartening to note that India's external GDP is 17.6% of the GDP. So that gives some comfort that we can sleep calmly and worries is what my surmise. Correct me if I am wrong.
Lessons can always be learned. Lessons can always be learned from the world. It's a two-way channel. Thank you anyway.
True.
Thank you very much for this opportunity.